Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing 4 articles, to where the first one will go over a recent downgrade by an analyst for the PLTR stock's overall rating, and we will go over how this has impacted their overall share price. After that, we'll talk about the latest news updates, approaching catalysts, and where this company could actually be in the future beyond the year of 2023. On top of that, we'll go over a successful prediction by me, who predicted that the company would pull back on their overall share price, which is exactly what we've seen, pulling back by around 12% as of right now. We'll discuss their overall fair value, their upcoming price predictions and price targets, forecasts, as well as where this company could be by 2025. Or even 2028. And we're going to use the recent projections from various professionals to estimate their overall share price in 2025 and in 2028. So for more videos just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents, but don't worry, if you can't support me personally to keep me here on YouTube, but by subscribing, you will get this content completely for free. But with that being said, I say let's dive right into today's stories. Palantir Technologies, as you already probably know, is a big data and analytics company which serves both commercial enterprises as well as government agencies. Palantir also specializes in artificial intelligence, and they have been the talk of the town recently, with many retail investors flooding into this overall stock and company. But the most recent update is that a Raymond James analyst downgraded Palantir Technologies from a strong buy rating to an outperform rating. However, on the other hand, I do want to point out that their price target did increase from $15 all the way up to $18, and that is now the new high-end price target when you look at analysts. Currently, the PLTR share price is trading at around $14.78, while the high-end price target is $18, and the low-end price target gravitates at around $5 per share, so I'm going to leave it up to you to do your own research to determine what this company is truly valued at. But as of right now, it seems that investors are selling off this overall company due to this overall ratings downgrade that we have received from Raymond James. However, I want to go over the specifics about why this particular analyst decided to downgrade his overall rating, but increase their overall price target. As you've seen in the stock market, the PLTR stock price has been on the move, and there's overall bullish momentum still behind this company, which is mainly coming from retail investors, even though the majority of analysts have a hold rating on this overall company, including myself. I have a hold rating due to the company being too high in their overall share price, according to me and 17 other professionals. However, as comparison, this author points out that the average analyst price target for this company is around $8.25 per share. However, let's specifically talk about the recent price rating downgrade from Raymond James and why he decided to downgrade the overall rating while increasing the overall price target. He said, and I quote, "The recent run in shares coupled with a premium valuation make finding a catalyst more challenging in the near term, while our LT enthusiasm for AI and Palantir's positioning support our outperform rating," end quote. So essentially he's saying that this company has received a lot of hype lately, and it's going to be harder for the company to continuously increase in their overall price if there are not more catalysts following it to keep that price elevated, and I would 100% agree with him. We've also noticed that the overall volume of shares trading hands have been less than normal. The recent movement in the overall share price came alongside 31 million shares trading hands, which is below the average daily trading volume of around $65.6 million. So it seems that some retail investors are starting to slow down, and that is what caused the overall share price to decrease on top of this overall downgrade from this institution and analyst. But now let's jump over to talk about exactly how low the overall share price can go and what we can anticipate from this company in the future. As of right now, Palantir Technologies has decreased in their overall share price for 3 straight trading days in a row, showing around a 12% loss. And this would meet the criteria of a pullback, considering that many Wall Street professionals defined a decline of at least 10% to up to 20% from a bull market peak as a quote-unquote correction. Now, I'm saying this quote-unquote correction happened, but just mainly for Palantir Technologies, not the overall broader stock market, which is what Wall Street is referring to. So I would say that my prediction of a pullback for this stock has indeed come true. However, I do want to say say that this particular author from Morningstar has a very interesting fair value price target, because Morningstar as an institution has a fair value price target of around $9 for this company, while I have recently changed my mind on this company and I gravitate more toward a $10 fair value estimate for this company, at least over the next 12 months or until the end of 2023. So this could either mean one of two things. Either the company will continuously start trekking back with minor up pulls and pullbacks until it reaches $10, falling from their original $14 to $15 share price right now, or we could see the opposite happening due to investors doubling down on Palantir Technologies after temporarily taking profits, and then they're going to reinvest back into the company when it falls to a good support level, and then it will re-enter its overall uptrend for the overall share price, and then the moon's the limit from then on. So now let's talk about this more bullish positive article where the author believes that Palantir will trend upwards gradually over the next 5 years, mainly due to their artificial intelligence offerings which they can give their overall customers. So this is his overall thesis on Palantir Technologies. He recently increased his overall Palantir Technologies PLTR stock from a hold rating to a buy rating, while I myself have a hold rating until the company falls to around $10 or below. And the reason why he changed his mind from a hold rating to a buy rating, which I most certainly can do as well once we get more data from the upcoming earnings report, he says that if you have a long-term perspective on the company, right now could be a good buying opportunity, because his time horizon is 5 years from now. And if we couple that with the worldwide AI software platform market, which is projected to have extremely strong growth, and Palantir is going to receive a tailwind from this, this is also going to benefit the PLTR stock tremendously. And he says that we know that the AI software platform market is going to increase very rapidly due to a market research firm called International Data Corporation, or IDC. He's essentially saying that artificial intelligence and machine learning is going to be the key for Palantir's growth over the long term. And recently we had the AIPCon for Palantir Technologies regarding their overall customer conference, and the author says that this has reinvigorated investors to hopefully flood back into Palantir Technologies despite this pullback which I predicted previously. He also believes that artificial intelligence will keep Palantir Technologies afloat throughout the next 5 years, from now until 2025, 2027, and 2028. And that's why the author has increased his overall rating from a hold rating up to a buy rating. He also cites correctly that last September, Palantir issued a press release citing research from IDC that recognized Palantir Technologies as, I quote, the #1 artificial intelligence software platform both in 2021 market share and 2021 revenue, end quote. So he's essentially saying that since they are a market leader in this space, they clearly have the most to grow and the most to gain from this overall artificial intelligence market surge. In a nutshell, the author highlights, as long as Palantir Technologies continues to innovate in artificial intelligence, they should keep growing at a very stable and consistent rate from now into the foreseeable future. And he believes this is going to act as a great catalyst and tailwind, causing the PLTR stock price to increase gradually. He even mentions how the IDC's forecast point for worldwide generative AI platforms and generative AI application markets will expand by CAGRs between 126% and 110%, from 15.9 billion to 20.8 billion between the periods of 2022 and 2026, which will add more fuel to the fire, especially as we get closer to 2028 from those overall projections. This is extremely positive news, and it could actually change management's forecasts for Palantir's future revenue, because like we've talked about in a previous video, their CAGR regarding the revenue, which is a compounding annual growth rate, fell from around 30%, which is extremely positive, down to 25%, down to 20%, down to right now around 16%. And ideally, we would want this number to be as high as possible, because that indicates how quickly and how fast the company is scaling their overall revenues. However, once we looked at management's projections, they believe these metrics will actually bottom out at around 10%, and that's what their stable revenue growth will be for the foreseeable future, which is still pretty good. However, with the addition of artificial intelligence and Palantir taking advantage of this overall artificial intelligence market, this 10% could actually return to that 16, 20, 25, or 30% compounding annual growth rate, which will invigorate investors and bring down their overall accounting ratios, which is a very positive development, thus increasing their overall share price. I also want to note how the Palantir CEO is also very optimistic about their artificial intelligence platform, to where the author goes into 3 reasons why this is really good news and how Palantir could increase in their overall share price over the long term. He says, quoting straight from the CEO, that there are more inbound interest for Palantir in the last couple of weeks than they've had all of last year, end quote. This means that companies are really paying attention to Palantir Technologies, and hopefully they will hire Palantir Technologies through a contract to use their overall platform and services. So it's really good how it's coming straight from the mouth of the CEO that they have experienced more interest from other companies in the last few weeks due to their artificial intelligence platform than they received all throughout the year of 2022. This means we could experience huge growth rates in their overall metrics, and I'm very excited for their future earnings report so we can get more information from management which will help me correctly predict the future of this company. But as of right now, I'm a slave to the data and I have to stick with my current projections until I get new data, and then I will change my mind. The second key metric that the author points out is that Palantir Technologies could generate revenue equivalent of around a 20% CAGR due to their new artificial intelligence offering, and that's exactly what I was alluding to earlier, how their recent 10 to 16% CAGR could actually maintain around a 20% compounding annual growth rate due to this new artificial intelligence platform, because these other metrics were metrics that came out before Palantir's AIP platform. Palantir even noted that their artificial intelligence applications are clearly helping Fortune 500 companies. One in particular, they helped that Fortune 500 company save around $100 million. On top of that, Palantir might charge around $20 million or a similar portion of the savings of what they saved that Fortune 500 company. So maybe Palantir will come out with a pricing model saying, hey, if you use our software, we're just going to take 20% of whatever we actually save you. This way we both end up winning. So if they saved somebody $100 million, they would actually have a $20 million payday. And this way, both Palantir gets paid and the company that hired Palantir is saving loads of money. The third thing that the author points out is that Palantir Technologies is really helping out their major clients. For instance, Cleveland Clinic witnessed a 33% increase in patient acceptance rate and a 75% reduction in time spent calculating bid activity, meaning that Palantir Technologies is making this company much more robust, efficient, and effective, which just goes to show the real potency of Palantir's overall technology. Lastly, he says that Palantir has plans to make loads of money from their artificial intelligence platform, which is going to be the future of this overall company. However, there are some risks that you should be aware of. For instance, Palantir's management remains cautious about the company's revenue growth outlooks and their future projections given the overall unstable macroeconomic pressures that are on the economy right now. They are essentially referring to Jerome Powell and the Federal Reserve's potentially increasing interest rates, which right now will happen. It's currently predicted that interest rate hikes will happen twice or at least once before the end of 2023, and this is going to be bad for growth stocks in the overall stock market, at least temporarily in the short term. Nevertheless, investors should look beyond 2023 for Palantir's future overall growth potential, especially since they are now riding that overall artificial intelligence wave, which is doing their stock a lot of good. So now let's look at the long-term projections for this overall company. The author again reiterates that he wants to buy Palantir Technologies and he will continue to dollar cost average into the company over the long term. For me, I don't advocate for more than an initial 5% portfolio allocation to any singular risky growth company. Right now I have around a 2% portfolio allocation to Palantir Technologies, and I will only increase this overall allocation to 4 to 5% once the company reaches or drops below $10 per share. Now if it doesn't do that, that's completely fine. I am still making a lot of profits from this because my overall average cost is decently low. However, with Palantir taking advantage of artificial intelligence, the sky is truly the limit for this company, but I would caution you to be aware of a pullback and to periodically take profits as the company continues to trend upward, so you are not caught either being overexposed to this company, which could lead to unnecessary losses, or I don't want you to miss out on profits because if it does pull back and it doesn't recover for many years, I at least want you to have some money left in the bank. But I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. Don't forget to become a member of this channel, and if you want more videos like this one, don't forget to subscribe, and I will see you in the next YT video.